Actually, it hasn't been that long. Not so long ago, everybody and their grandmother was talking about Virtual's protocol, about the AI agents revolution, how AI agents are going to trade cryptocurrencies and how we can buy those agents, getting a stake in the race. Some people also thought that maybe it makes sense to buy those AI agents because it's still a player versus player game potentially. Very similar to, at that time, the very successful Pump.Fun ecosystem on Solana. Virtual's protocol was mainly active on the Base chain. So indirectly it was a speculation on Base getting more adoption. Now, I published a lot of videos on Virtual's protocol at the time on this channel. The very first video was published 282 days ago and it outperformed the average video. The recent update is roughly 1 month old and this time the video is just performing pretty much average. So the attention tends to go down, no surprise here. By the way, the very first video was published when the price was still at 41 cents. Now we are at $1.37 even after this recent crash, because we are down 11% this week. And that's a movement specific to the Virtual's protocol, because Ethereum during the same time actually went up by 8%. But yeah, if you want to be early on various cryptocurrencies here on this channel, feel free to subscribe. I publish videos regularly on the assets that still have upside potential. And so what happened with Virtual's protocol? Why did the price drop? And is this potentially an opportunity? Did this whole idea that the Base chain gains adoption, did that idea suddenly die? Because the total value locked on the Base chain actually continues to rise. It's currently above 4 billion. The issue with this chart is that a lot of the assets on the Base chain are denominated in Ethereum. And so when we look at the total value locked in ETH, that has actually peaked. We saw growing adoption until the beginning of April of this year. Since then, the Base chain is rather struggling. But Virtual is not anymore the same thing as the Base chain. It has also launched on the Solana chain and there are various AI agents. The question is, what's the adoption of those AI agents? The website has gone through various transformations throughout the months. The trending AI agents are here on the left, but let's have a look at a proper overview here on CoinGecko. So at number 1, we've got the Virtual's protocol token. It's now at a market cap of 900 million. And then we've got 2 other major AI agents. We have AI XBT. There are also separate videos on that asset on this channel. And we've got Ribbiter. All other AI agents have less than 100 million in market cap. They're all micro caps pretty much. The active trading with individual AI agents has pretty much died. Yes, there are 2 more agents that get some activity, but all the rest is not active at all anymore, at least in terms of trading. But here's the thing, right? Crypto is all about buying low and selling high. And obviously the Virtual's protocol currently is not very high. So is this an opportunity to pick up the pieces? I always try to answer those questions in terms of relative evaluations. So does it make sense to take on the additional risk of buying Virtuals over, say, just Ethereum, or is it not worth it? What's the potential upside? What's the potential downside? And so what we see over here, that's a Virtual chart relative to Ethereum on a logarithmic scale. And not so long ago, Virtuals was the thing in town. The rally was 18,000% versus Ethereum. Then we had a massive crash that started at the beginning of the year, where Virtual underperformed ETH by 77%. Another rally, now another crash. But this seems to imply that maybe we've got some kind of support here and that the potential risk versus reward isn't too bad. Unfortunately, things aren't that simple. Let's have a look at the on-chain data. Let's actually see what's causing those price spikes and those price declines. Virtual is the 8th largest token on the Base chain in terms of liquidity. There's 5.6 million of liquidity here. In the last 24 hours, we only saw 1,600 wallets interacting with the token. There were less buyers than sellers, but the price went up slightly. And on-chain, we've got almost 900,000 holders. So this gives us a perspective of how inactive the token currently is relative to its owner base. Now what we see over here is the number of retail investors versus whale investors over time. So to be counted for the chart on the left, a wallet has to hold at least 1000 virtual tokens. And again, since beginning of the year, this tends to go down. For the chart in the middle, a wallet has to hold at least 10,000 tokens. That's going down since the end of last year. And for the chart on the right, it's 100,000 tokens. That's also going down since the end of last year, beginning of this year. It seems like the whales are selling most aggressively relative to the holder base. They went down from roughly 350 to 250. So a drop of almost a third, while the number of retail investors went down from 12,000 to only 10,000. So a drop of around 20%, a bit less. So there's constant sell pressure on the spot market. People really aren't that bullish on Virtual's protocol. But at the same time, we've also got levered bets on the price, right? We've got 11 million worth of trading volume on Hyperliquid. And while the trading volume on the spot market is higher, right, that's here on Binance, the perpetuals still matter to a degree. Most of the time, people are actually betting on falling prices of Virtuals. Currently, the longs have to pay the shorts, so there's a positive funding rate. But this is fluctuating quite a bit, and for most altcoins this tends to be positive, as in the longs have to pay the shorts to get more price exposure. The trading volume on the perpetual futures also tends to rather be on the decline, and there is a correlation between the price and the trading volume. And the liquidations are mainly on the long side, especially recently. Now, I'm not really a fan of buying this dip, and here's why. At the face of it, it looks like a great opportunity, right? There isn't that much more room to fall, but I do believe that there's a great chance we will actually fall below this support. And again, the reason is the perpetual futures. This is how much leverage there is in the price, how much short-term capital is currently deployed in an asset. When this is very high, the spot price tends to be high. When this is very low, the spot price tends to go down as well. And currently, we are still comparatively elevated. There's still 160 million worth of open interest on Virtual. And when this declines further, which I think isn't too unlikely, then the spot price will go lower as well. And so once we are at open interest of around 50 million again, then maybe it makes sense to pick up the pieces. If we at that time still stay above this support, is very unclear, but until then, I stay away. I'm not shorting Virtuals yet because it has already come down that much. It's probably not the worst short in the world because of the constant sell pressure. But again, there is this support and there might be some short-term speculators that will still risk putting in some money at those levels. Currently, the momentum is obviously negative. The general problem with crypto as a whole is that there's more and more token emissions. So a lot of projects launch and the founders want to pay themselves. The early investors, the venture capitalists want to pay themselves. Maybe there was also some marketing expenses. So some YouTubers might get an allocation and then sell the token. And the retail investors have to support all of that selling for the prices to stay stable. This here is the weekly token emissions of the entire altcoin market that's tracked on this website, Tokenomics.ai. And it's pretty much above 600 or at least $500 million every single week. If the inflows into crypto are slower than that, then the altcoins have to go down, at least relatively speaking. For example, have a look at this here. This is the DeFi protocol 1inch. So it's a decentralized exchange aggregator. It got a lot of usage in the past. But the problem is that the circulating supply grew massively as well, right? From 100 million to now 1.4 billion. And that then leads to 1inch doing much worse than Bitcoin or Ethereum. This is 1inch relative to Ethereum. Have a look at this. This is Optimism, right? A leading layer 2 scaling solution on top of Ethereum. It started out with 214 million tokens and it's now at 1.6 billion tokens. And that's the long-term chart relative to Ethereum. And so there are several consequences from this, right? We cannot afford to own a lot of different altcoins because the vast majority of altcoins underperforms Bitcoin and Ethereum most of the time because of that token inflation. But also picking a single winner here and there is very hard because, again, most tokens do worse. So it's like picking the needle in a haystack. Some people simply just stick with Bitcoin, Ethereum and Solana then and forget the rest of the altcoin market. But I actually think there's an opportunity here because if we have constant underperformance, we can bet on that. We can bet on the underperformance to continue and make money from that. So instead of getting this performance by buying 1 inch, we flip this around. We bet on falling prices of 1 inch and bet on rising prices of Ethereum at the same time. So this is the same chart, just flipped. And this is simply using decentralized finance to do exactly that setup. We are betting on Ethereum to outperform 1 inch. Same here for optimism, right? Instead of buying optimism, we are just betting on falling prices of optimism relative to Ethereum. So in the last year, that position performed 150% roughly. Now try to make 150% in a year just by plain simply buying an altcoin. It's much easier said than done. Yes, there are some outliers. There is this Aerobot and this DRGN and this SNSY token, but the vast majority of altcoins is just going down. And so instead of trying to find the next Aerobot, I think it's better to just flip this around and everything that's red becomes green and everything that's green becomes red. So then we've got the odds in our favor. We don't try to pick the needle in the haystack. Instead, we bet on the haystack, on the vast majority, to do poorly. And again, there is a fundamental reason for that underperformance, right? It's all of those insiders selling all the time. The venture capitalists, the team, etc. Maybe even the users of the platform that get incentivized in tokens to use the platform. Have a look at the altcoin market cap relative to Bitcoin in the last 3.5 years. It underperformed by 75%. And if you flip that around, we've got an outperformance of almost 300%. So this is now Bitcoin divided by the altcoin market cap. I'm following this strategy already for quite a while. What we see over here is my portfolio performance in the last 4 years roughly relative to had I just dollar cost average into Bitcoin. So the Bitcoin dollar cost averaging is in gray and my portfolio line is that one in black. This is monthly data out of my personal Excel sheet. We're now at month 44. I did this mainly with borrowing in lending platforms like Aave and Venus Finance, but recently I changed to perpetual futures and this is even more productive. I started the test 2.5 months ago with 40K and that turned into 60K, again just in 2.5 months. And so the premium members of this channel asked me, is there maybe a way we can just provide some capital to you and you do those relative valuation trades for us? And so I opened just that. It started 6 days ago, so there's no real sample size yet, but so far it has made 3.5%. I'm happy if we do 10% per month. I don't think we'll make 50% in 2.5 months again. But in general, we are moving in the right direction. And again, it makes a lot of sense, right? Most altcoins do worse than Bitcoin or Ethereum. We don't really have to be that scientific about it. If you want to learn how to become a winner in crypto and how to set up those relative valuation trades, where then the VCs and the insiders don't dump on you, but you're actually making money when they are dumping, then feel free to check out all of those tutorial videos, right? There's more than 100 tutorial videos in premium. I'm of course sharing my own trades as well, and then you can simply copy trade and take advantage of those trades as well. There are many opportunities out there, so feel free to check out the community as well. And so if you're an active trader, you can simply sign up for the monthly membership. It's $125 per month. You can watch all the tutorials, you can copy trade me as well. And once you're joining, I will also share my favorite trade. And if that favorite trade doesn't make you money in the first month, I will refund you 100% of that membership fee. So really, you don't really have a risk of joining here. You're either making your money back or it's for free for you. If you are not an active trader though, and you simply just want to allocate capital, you've got more capital than time, then you can sign up for the annual membership. Here you also get 2 months for free, so $250. And with the annual membership, you also get access to the automated copy trading feature, where you can simply just send money to Hyperliquid. So that's the platform that I'm using. And you get the exact same trading performance that I'm getting as well. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.